Today I'm going to talk about a topic that has been on everyone's mind lately: the real reason why home prices are still so high in 2024. You might think that after the pandemic, the recession, and the surge in mortgage rates, home prices would have cooled down by now. But that's not the case. In fact, according to the National Association of Realtors, the median home price in the U.S. was $462,000 in December 2023, up 15% from a year ago. So what's driving this relentless rise in home prices? And will it ever stop? In this video, I'm going to explain the real reason why home prices are still so high in 2024 and what you can do to navigate this challenging market. Whether you're a home buyer, a home seller, or an investor, you'll want to watch this video till the end, because I'm going to share with you some tips and strategies that could save you thousands of dollars and help you achieve your real estate goals.
Well, bad news for prospective home buyers. Even as housing prices remain high, mortgages continue to go up as well.
The thing that's happening with real estate is interest rates have gone way up. They're bumping up close to 7% now.
The first thing you need to understand is that the housing market is driven by two main factors: supply and demand. Supply is the number of homes available for sale, and demand is the number of buyers who want to buy them. When supply is low and demand is high, home prices go up. When supply is high and demand is low, home prices go down. It's simple economics. Now, let's look at the supply side of the equation. Why is there such a low supply of homes for sale in 2024? Well, there are several reasons for that. One of them is the higher construction costs. Due to the pandemic, the supply chain of building materials was disrupted, leading to shortages and price hikes of lumber, steel, concrete, and other essential components. According to the National Association of Home Builders, the average cost of building a single-family home increased by 24% from 2020 to 2023. Another reason for the low supply is the stricter zoning regulations. Many local governments have imposed limits on the density, height, and design of new housing developments, making it harder and more expensive for builders to construct new homes. According to a study by the University of Pennsylvania, zoning regulations added an average of $23,000 to the cost of a new home in 2020. A third reason for the low supply is the lower builder confidence. Due to the uncertainty and volatility of the market, many builders have become more cautious and selective about starting new projects. They are also facing labor shortages, financing challenges, and environmental regulations that make it more difficult and riskier to build new homes. According to the National Association of Home Builders, the Builder Confidence Index dropped from 90 in November 2020 to 65 in December 2023. A fourth reason for the low supply is the higher land prices. As the demand for land increases, so does the price. According to the Lincoln Institute of Land Policy, the average price of land per acre in the U.S. increased by 27% from 2015 to 2020. This makes it more costly for builders to acquire land and develop new housing units. A fifth reason for the low supply is the government subsidies that favor renting over owning. The federal government spends more than $200 billion per year on housing assistance programs, most of which go to renters rather than homeowners. According to the Joint Center for Housing Studies of Harvard University, only 37% of federal housing subsidies go to homeowners, while 63% go to renters. This creates a disincentive for homeownership and reduces the supply of homes for sale. These are some of the main reasons why the supply of homes for sale is so low in 2024. But what about the demand side of the equation? Why is there such a high demand for homes in 2024? Well, there are also several reasons for that. One of them is the demographic shift. The largest generation in U.S. history, the millennials, are entering their prime home buying age, which is between 25 and 45. According to the U.S. Census Bureau, there are about 72 million millennials in the U.S., and they account for about 40% of the home buyers in 2024. Millennials have different preferences and expectations than previous generations, and they are looking for homes that suit their lifestyles, such as larger spaces, smart features, and green amenities. Another reason for the high demand is the lifestyle change. Due to the pandemic, many people have adopted a work-from-home or hybrid work model, which allows them to work remotely from anywhere. This has increased the demand for homes that have more rooms, more privacy, and more comfort. According to a survey by Zillow, 75% of workers who have the option to work remotely say they'd want to continue doing so at least half of the time after the pandemic ends. This means that more people are looking for homes that can accommodate their work needs, as well as their personal and family needs. A third reason for the high demand is the low inventory. As we discussed earlier, the supply of homes for sale is very low, which creates a sense of urgency and competition among buyers. When buyers see that there are fewer homes available, they tend to act faster and bid higher, fearing that they might miss out on a good opportunity. According to Redfin, the average time a home stays on the market in 2024 is only 17 days, down from 43 days in 2020. The average number of offers per home is also up, from 2.9 in 2020 to 4.1 in 2024. This shows that buyers are facing a lot of pressure and competition in the housing market, which drives up the demand and the prices. A fourth reason for the high demand is the inflation hedge. Due to the massive stimulus spending and money printing by the federal government and the Federal Reserve, the U.S. economy is experiencing a high level of inflation in 2024. According to the Bureau of Labor Statistics, the Consumer Price Index, CPI, increased by 6.8% in 2023, the highest annual rate since 1982. Inflation erodes the purchasing power of money, which means that the dollar is worth less over time. To protect their wealth from inflation, many people are looking for assets that can appreciate in value and provide a hedge against inflation. Real estate is one of those assets, as it tends to increase in value over time and generate income from rents. According to the Federal Housing Finance Agency, the House Price Index, HPI, increased by 12.5% in 2023, outpacing the inflation rate. This means that homeowners are seeing their home values increase faster than the cost of living, which makes real estate an attractive investment in an inflationary environment. So as you can see, the housing market in 2024 is still very hot due to the low supply and high demand of homes. But will this trend continue, or will it change in the near future? And what does it mean for you? Whether you're a home buyer, a home seller, or an investor. In the next section, I'm going to share with you some predictions and recommendations for the housing market in 2024 and beyond. But before I do that, I want to ask you a question. What do you think is the main reason why home prices are still so high in 2024? Is it the low supply, the high demand, or something else? Let me know in the comments below, and I'll respond to some of your answers. If you're enjoying this video so far, please hit that like button and share it with your friends and family who might be interested in this topic. It really helps me out and supports my channel. And if you haven't already, make sure to subscribe and turn on the notifications so you don't miss any of my future videos. I have some exciting topics coming up that you don't want to miss. Alright, let's wrap up this video with some predictions and recommendations for the housing market in 2024 and beyond. Based on the current trends and data, I expect that the housing market will remain strong and competitive in 2024, but not as much as in 2023. I think that the supply of homes for sale will gradually increase as more builders complete their projects, more homeowners decide to sell, and more foreclosures hit the market. I also think that the demand for homes will slightly decrease as mortgage rates rise, affordability declines, and buyer fatigue sets in. However, I don't think that these changes will be enough to cause a crash or a significant correction in the housing market. I think that the housing market will simply slow down and stabilize, and that home prices will continue to grow, but at a slower and more moderate pace in line with the historical average. According to Zillow, the median home price in the U.S. is projected to grow by 5.1% in 2024, down from 12.5% in 2023. So what does this mean for you, depending on your situation? If you're a home buyer, I recommend that you be patient and realistic in your home search. Don't rush into buying a home that you can't afford or that doesn't meet your needs. Be prepared to face some competition and bidding wars, but also be willing to walk away if the price is too high or the terms are not favorable. Make sure to get pre-approved for a mortgage, have a good credit score, and save up for a down payment and closing costs. And most importantly, work with a professional and experienced real estate agent who can help you find the best deals and negotiate the best terms for you. If you're a home seller, I recommend that you take advantage of the high demand and low inventory and sell your home while the market is still hot. You can expect to get multiple offers and a high price for your home, but you also need to make sure that your home is in good condition and that you price it right. Don't overprice your home, as that could scare away potential buyers and make your home sit on the market longer. Hire a professional home stager, photographer, and marketer to showcase your home's best features and attract more buyers. And of course, work with a reputable and knowledgeable real estate agent who can help you sell your home fast and for top dollar. If you're an investor, I recommend that you be cautious and selective in your investment strategy. Don't buy properties that are overpriced or that have low cash flow potential. Look for properties that are undervalued, that have strong rental demand, and that have room for appreciation. Focus on quality over quantity and diversify your portfolio across different markets and asset classes. And always do your due diligence, research the market, and analyze the numbers before you invest. I hope you found this video helpful and informative. If you did, please give it a thumbs up and share it with your network. And if you have any questions or comments, please leave them below, and I'll try to answer them as soon as possible. Thank you for watching, and I'll see you in the next video.